What's going on, everyone? It is Wednesday, September 18th. It is Fed meeting day, big day, and it's always a fun day to do an update. So I'm going to do two updates today. We're going to do one before the Fed meeting and one after, because I want to see what happens. Let's see what happens here with this meeting. So they're anticipated to drop rates 0.25%. Now, everyone thinks that if they drop rates 0.25%, that means mortgage rates go down 0.25%. And as we've seen on these videos in the past, that isn't what happens. You have to remember that once it's been put out into the universe, it's expected. So the markets have already reacted to the news. So the analogy I always give you guys on a day like today is if you own stock in Google, and Google today says, hey, you guys, in November, we're going to do a ton of layoffs. Earnings are terrible. It's not going well. Would you sell your stock in November, or would you sell your stock today? You would react to the news now. So as soon as you hear the news, you react. So if the Fed does cut rates a quarter, that is what's expected to happen. I don't think we'll see huge movement in mortgage rates. But if they don't cut rates, I think you will see movement in mortgage rates, probably for the worse slightly. Now, the other thing is, it's not what you say, it's how you say it. So there's other things that are said in these Fed meetings. They just walk up on stage and go, hey, we're cutting rates a quarter, and walk off. There's more to it than that. So think of it like a text or an email you've received that you read it and you were, or maybe let's go the other way. You sent a text or an email, and the reaction the person receiving it had was not at all what you wanted. You're like, whoa, I'm so sorry. I didn't mean to offend you. What did I write? The way you read it was different than the way they interpreted it. Well, that's a lot of times what happens with these Fed meetings. They might say something and the market reacts negatively or positively. They're just reacting to their interpretation of what was said. So that's a lot of what happens today. Typically a volatile day. I mean, even that one time frame for the meeting is always super interesting, just to watch what the market does while it's going on. So all that being said, let's jump in and take a look at where mortgage rates are currently, because last week was one of the worst weeks we've seen for mortgage rates in about 7 years. So let's take a peek. All right. So as always, we're looking at the 10-year Treasury. What you'll see is we're looking back 3 months, and here is last week. See these 5 days, Monday, Tuesday, Wednesday, Thursday, Friday? Well, remember, as the 10-year goes up, so do mortgage rates. Typically, it's not a perfect science, but it's close, and that's why we use it as our guide. But then remember, this weekend, Saudi Arabia had drone strikes on its oil fields, which triggered rates to go down, or the 10-year to go down Monday, Tuesday, and here we are Wednesday waiting for our Fed meeting. So what does that mean? When we see rates move this much, that was probably about 0.25% in rate is what that movement last week translated to. And that's pretty significant. The last time we saw that was about 7 years ago. So, but what does that mean? Does that mean rates are awful right now? Let's look back over the last 3 years, as I always like to do, because I love watching history repeat itself. And as always, I'll get rid of all these lines for you guys. So what do we have? Well, if this is us here today, if I draw a line straight across the last 3 years, it's about even. You can see that rates are better, far better now than they were at the end of last year or even the year before. We still have the best rates we've seen in 3 years. So rates are great. So what's going to happen with the Fed announcement? Well, if we go back and look at just today, we're sitting here and there's really nothing to stop us from having rates get worse. But if you look, let's see, if I draw a line right here, this was interesting to me. You've got kind of, do you see how there was a ceiling here and now it's acting as a floor? I think that could potentially hold rates where they currently are. Of course, I want to see them get down here. This is the lowest we'd seen in about the last 3 years. And we're about, let's see, that's 145. We're sitting at about 175. So it's a 30 basis points change from a couple weeks ago. So not bad. Not bad at all. So let's see what this Fed announcement does for us. Let's see if rates get better or if they get worse. I'm going to do another update after. You're getting this one before the meeting. I'll send another one after the meeting, and we'll see what happens. Thank you guys so much. Any questions, as always, reach out. Let me know how I can help. Feel free to comment below, and I will talk to you this afternoon. Cheers.